We're about to get started with our session on 2025, the digital currency payments tipping point, which is a long, winding way of saying, hey, build on PYUSD, build on our stablecoin. So we're going to be spending most of the time talking about stablecoin. I'll provide some intro about why we're doing what we're doing, and then I'll get off your hair and open the way for the most important part of the session, which is hearing from the builders, the merchants, the platforms who are using stablecoins today for payments. My name is Jose Fernandez da Ponte. I have the luxury of leading the crypto team on the PayPal side. You might have heard some of the stuff that we have been doing in the space for the last 6 years now. And sometimes we get a question about why are we doing this? Why are we involved in digital currencies and crypto more broadly? And part of that is the message from Alex Chris, our CEO. So we are involved in crypto and digital currencies because we think that there is a relevant option that this becomes the next generation of payment rails. We have been doing digital payments for a long, long time. PayPal's been around for the last 25 years. Many of us in the team have been involved in payments for the best part of the last 20. And when you look at the path that took us to where we are, most of the innovation that you have seen in payments for the last 20 years came from two sides. It was either innovation on the user experience, so more convenient interfaces and especially mobile, or it was innovation on fraud prevention and risk models when there are card-not-present transactions. But the fundamental way of moving money is basically the same that has been for a long while. So if we take a very quick trip down memory lane, if you look at end of the 19th century, first wire transfers, you all know wire transfers, but you might not know that they are called wire transfers because they were running on telegram wires. So this is technology that is 150 years old. First credit card in the 50s, first ACH network, all these things that we talk these days about real-time payments and bank-funded transactions. So the first ACH network in the US is as old as I am. And if you look at cross-border SWIFT, which is all the rage today, has been around also for the last 50 years. So we are all still moving money in the fundamental pipes that were built 50 years plus ago. This is not coming from anyone in Silicon Valley. This is not coming from anyone in the fintech sector. This is coming from Paul Volcker, former head of the Federal Reserve. That is probably still true, and he said that 4 years ago. So in terms of what we're trying to build here it's not meme coins, it's not the Degen side or anything like that. We're trying to build the new plumbing for payments infrastructure. As you all know, I will not spend a ton of time here. The current payment system is built this way. It's a connectivity through interbank messaging and ledger reconciliation, and it is slow. It's built to be bulletproof, is built to not fall, is built to have no outages, but it's small and it's expensive. And now we have part of the technology that enables alternative flows and is able to move money more readily, fast, cheap. It is complex though. So it's part of our role as a company, as part of the people building the system, to be able to abstract this way, for this complexity from consumers and merchants, because as you will hear I'm sure it will come up in the panel, people don't care about whether the payment is moving on fiat rails or on banking rails or on stable coins. And in many cases, they are not going to be aware that money is moving on stable coins. We'll talk about some of our experience in cross-border payments. We do today use our own stable coin for remittances. We have a large business called Zoom that manages billions of dollars in remittances to 180 countries. We have implemented stable coins in a consumer-facing manner, meaning that you're here, you want to say, I grew up in Spain. I'm here, I want to send money back to my family in Spain. I can fund my transaction in stable coin if I carry that in my wallet, and then PayPal will not charge any transaction fees. So effectively, we are providing fee-free remittances on stable coin. But we are also doing it in a non-consumer-facing way. So we are using stable coins to settle with our disbursement partners abroad, in the sense that a consumer, I would send dollars from here to the bank account of my family in Spain. I will charge my bank account. My family will get euros in their bank account. The transaction, the wholesale side of that transaction happens in stable coin. So we move the fiat into stable coin. We push a stable coin abroad. our local partners move the stablecoin back into local currency and push that last mile. Many of those cases that we're going to talk about, we will talk about B2B, we will talk about the billions of dollars that are today happening on stablecoin transactions. Many of those, that abstraction is going to happen, and the sender and the receiver will not even know that there is a stablecoin part of it. So a year and a half ago, we launched PYUSD, which is our stablecoin. It is now, has about, today is a hair below 900 million in market cap. If you are close to the stablecoin system, the stablecoin market loves to talk about market cap, and it is relevant. There are about 260 billion of stablecoin market cap today. Tether is, the largest one is Tether, which is about 160 billion. The second largest is USDC, which is about 60 billion. The industry is very enamored with discussions on market cap, and that is an artifact of the monetization. So the way that stablecoin issuers monetize stablecoins are through assets on the reserve. Therefore, the assets in the reserve, the more yield, the more monetization. If you're interested in payments, which we are, and you have other ways of monetizing that, you care way more about velocity than you care about market cap. So the reason that we went and built our own is that first that we wanted to make sure that it was well regulated. We are issuing that through our partners of Paxos, which is a regulated trust in New York, is well regulated by the New York Department of Financial Services, and is only backed by cash and high quality short-term investments. And you can see to the dollar where those investments are saying, there are monthly attestations for that. So it was very important for us to build trust, to have a trusted brand like PayPal issuing the stablecoin, and to have that regulated in the US with reserves placed in the US. But beyond that, as I said, if you care about payments, you care about velocity more than you care about market cap. Market cap is important for liquidity, but we look at basically at 4 numbers. So our stablecoin is now a little bit under $1 billion. There are about 4.5 billion a monthly on-chain transfers volume. So this is PayPal stablecoin moving between wallets any given month. We have about 1.5 million transactions happening every month, and there are about 40,000 monthly active wallets. And remember that in our space, a wallet is not one user. Many of these wallets are exchanges with multiple users behind them. So we're really happy with the way that it has been adopted in the sector. And the question is always why? What is the appetite? Why should people be building on this? The two immediate, we can talk a lot about censorship resistance, resilience, decentralization. But at the end of the day, we're talking about cost, and we're talking about finality. So when you run stablecoins in some of the high throughput scales, our stablecoin runs on open source permissionless chains, where we are deployed on Ethereum and Solana, and we will have other chains. But from the very beginning, we decided, hey, there's not going to be a PayPal blockchain. We're going to build on open source technology, and it's going to be multi-chain. So the first two are Ethereum and Solana. When you run transactions on Solana, you're running transactions at a cost of about 1 cent per transaction. And this is not a percentage of the value, it's nothing like that. It's moving value between Solana wallets, costs 1 cent, and it settles in between half a second and a couple of minutes, depending on the day. That is, to put it in context, that is 26 times cheaper than an ACH transaction. It's 400 times cheaper than processing a check. We have always been saying inside the team that the universe goes to low energy states. So if you could find a place to move value, where you can move value 26 times cheaper than the next way of moving value, we will find use cases that are amenable to that. Some of the use cases that you will hear from our panel today are from existing use cases that get moved on-chain. We will see in the future cases that we cannot do with current payment rails. We will talk about micropayments. We will talk about machine-to-machine payments. So there are things that you cannot do on existing rails because the fixed cost base just make them uneconomical. We are, as we discussed, we are live on, you can use our stablecoin to buy at millions of merchants today. You can use it for remittances on Zoom. Over the next weeks, we're going to be using this for payouts. So for many of the companies that you work with or that you serve, who pay freelancers in South America, or they are BRB hosts and the like, who need to send payments abroad in smaller amounts, many of those folks want to receive digital dollars because they don't want to hold the local currency or whatever other reason. So that's going to be something that you will be able to do with our stablecoin. Another example that we have announced recently on the SMB space. So folks who have PayPal accounts and carry PayPal balance with them on the SMB side, they will be able to use our stablecoin to pay their vendors through our new bill pay tool. And we are eating our dog food in this space. We are paying some of our invoices. We are paying vendors on a stablecoin. Today it's integrated with SAP. We are making a ton of effort to bring our stablecoin to the places where our consumers and our merchants are today. So you all know PayPal as the company who brought payments from offline to online. We are on a multi-year journey to make sure that we can bring those payments from online to on-chain. And now, without further ado, let me hand it over to my dear colleague, Smita Purohit, who will introduce the panel. Thank you so much.
Thanks, Jose. So good afternoon, everyone. One of my biggest problems these days is that there's an overload of information, right? Like you hear about things, and especially in the crypto space, you hear about so much that it's very difficult to separate like the signal from the noise, right? And this panel is designed exactly to do that, right? Which is, we want to tell you about, like, is this stablecoin, crypto, all of this, is this a fad? Is this for the degens? Or are there serious players really thinking about this in a way that it solves customer problems, right? So this panel, I'm very excited to have panelists who are come from diverse backgrounds, diverse industries, and diverse scales, and kind of talk to you about how are they thinking about it, what are their problems, and how could this potentially solve. So I'm very excited to introduce our panelists. First up, we have Matthew Nam. Matthew is the co-founder and CEO of WinWin Coffee, and yeah, thank you, Matt. Yeah. Next up, we have Nalin from Google, and he leads Web3 at Google. And finally, we have Brett from Mesh Connect, and Mesh Connect is a startup that just got their Series B funding. They just got $82 million in their Series B funding. So like, for the developers out there, you should talk to him. Yeah. Yeah. So I'm super excited to have you on the panel. So perfect. Okay. We'll start off by, Matt, tell us like, what does WinWin do, and what are the key problems that you see in like the supply chain space?
Yeah, so WinWin, we are importer-exporter of coffee products. We work with any country from all over the world that produces coffee, and we manufacture it in the United States across our different roasting facilities and distribute it nationally into the United States. We use technologies to be able to help us to get the products here more efficiently, but also we want to be good to our producers, right? There's a fact about the people who produce the world's food. They often go to bed hungry, and it doesn't have to be that way when you have products like coffee, one of the largest traded commodities after oil. It's a $500 billion traded commodity, and the people who are producing these products for us are getting less than 1% off the goods. So some of the issues that we are seeing when we're working with some of these producers is that there are many different middlemen, and we want to create more efficiency for the dollars to go directly to the producer. And so if we can create a network of producers, which is what we've been doing, we can utilize some of these tools to be able to pay the producers directly and quickly, allowing them to get a significant portion of the money that we're sending for their green coffee.
Thank you, Matt. What are some of the problems that you see in the sense that when you do business with like your producers in Africa, like do you have challenges with moving money, and how do you think like a stablecoin could help you?
So it's really interesting. My co-founder is right here, Nikisha, in the front. But 2 years ago, we judged the National Coffee Competition of Colombia, and when we were there, we noticed that there were a lot of producers who we felt didn't reflect the demographic of the coffee community, and so we lobbied the organizers to help us locate a particular type of producer. 6 months later, we went back to an area called Popayan. And we had to take this 6-hour journey up this hill to meet these producers. And it was kind of scary. We didn't realize it was scary. They put us in bulletproof vans. They confiscated our phones because we weren't allowed to take videos because of this area. I'm not going to describe the area. And when we got to this area that didn't have significant infrastructure, the roads were really bad, we realized that this is a big issue for a lot of people in rural areas. They don't have the infrastructure that we probably take for granted. They're not able to, a lot of them are unbanked, so we had to go through a different party, not even their co-op, we had to go to a different party to send them money for their crop. And it was kind of dangerous, right? If they're getting a lot of money for their crop, people might know this, right? You see these 2 bulletproof new vans coming up with this, a motorcade, motorcycles at the front, motorcycles at the back, and everybody's coming to see what's this commotion that's never happened in this area before. So when we did the exchange with them, we were thinking, what would be a better way to do this, right? These people are unbanked. They're keeping a lot of their cash under their mattresses. We're in an area where they had to confiscate our phones and we couldn't show the area where we were in. How many people around the world are affected by some of these issues that cash is honestly, creating? And it's something that I've taken for granted, but I didn't really think about it until we started to explore other methods to be able to help get these people, these producers, great compensation for their product.
So, Nalan, coming from Google, could you give us a sense of how do you, from a macroeconomic conditions and a macro scale, how does Google think about what the role of stablecoins in their business?
Yeah, so I'll talk about 2 aspects of this, right? So how we think about blockchain in general, and then stablecoin specifically. And this will be from a Google Cloud perspective. I can't say this is like a Google-wide perspective, but in Google Cloud, we really believe that a huge percentage of the next generation of applications are going to be Web3 and that are built on the blockchain, right? And to the point where we're not even going to talk about 10 years from now, we're not going to talk about Web3 versus Web2. All applications or most applications will have a component where users log in with their wallet because they'll own some part of the data that they're producing and maybe leverage the identity that's on their wallet to unlock value in that application. So we think that's where the world's headed, and that's what's happening. And to that end, we're trying to be the best cloud to build Web3 applications on. We've been indexing blockchain data since 2018. We have RPC services, all the infrastructure you need basically to build on the blockchain. Now, I think stablecoins in particular are super interesting because they kind of marry the best properties of fiat as well as crypto, right? So in that normal crypto can be pretty volatile, as you've seen, can go up and down pretty rapidly. It's hard to build a business around that. I think stablecoins are pegged to the dollar or some currency, and so they bring that stability and reduce the volatility, so that's great. But then it also brings the great properties of cryptocurrency, which is inclusion, right? If you have a smartphone and internet connection, you can start receiving and sending these payments immediately. You don't have to worry about a complicated process. And I think there's billions of people today that are unbanked, right? So this is a real problem. And also, then the other part, I think Jose mentioned this a few times, which is instant payments, right? It's ridiculous that it's 2025, 150 years after the first wire payment. And now if I want to send money cross-border, it still can take 3, 4, or 5 days. In today's age, I think that's pretty crazy to think about. So I think these rails offer instant payments and then also microtransactions, right? So that's a big deal too, as you might pay for your service by the minute, by the second, depending on what you're doing, or maybe you can earn money in real time. You finish an Uber ride as a driver and you get paid instantly. That's kind of the economy that we're excited about.
That's amazing. Yeah. So Brett, I've been very inspired by Mesh Connect's journey, right? So from a startup to now, getting $82 million in your Series B funding. Tell us about what did you see, what is the bet, and what are you building?
Yeah, so at Mesh, really what we're building, you could think about the Web 2 world of what Visa and MasterCard built, right? But from our context and what we're moving into Web 3 is how do we abstract away all this complexity in the middle, right? So, for example, PyUSD, we know that merchants want to be paid out in PyUSD. So the question becomes, how do I get from A to B, right? It's a logistics problem at the end of the day. So how do we orchestrate all of that complexity in the middle to be able to move funds from a user's wallet or a connected exchange account such that it can then be converted to, say, PyUSD so that it can be paid out to merchants. So at Mesh, we're really working on how we orchestrate and abstract away all that complexity in the middle. One thing I will say is I think we're at a point now, a tipping point for stablecoins where they're coming into out of their nascency into maturity and finding real world utility, as we're seeing with PyUSD and how it underpins all of PayPal's infrastructure and core products. So I think at Mesh, and what we're concentrated on is how do we continue that acceleration, that proliferation of stablecoin adoption and make it easier for merchants, for PSPs, for everyone that is sort of in this matrixing of all different blockchains, and make that easier for everyone who's involved.
No, that's amazing. Matt, back to you. So when you think about, like, you beautifully described the problem here, right? Like, I think we here in the US, our currency is really stable. We don't really realize the importance of having that stability in your currency. And so that was a great story. Thank you so much for sharing that. Could you tell us more about that? Then how do you see the intersection of stablecoin into what you do? Meaning that how do you think about leveraging stablecoin to solve these problems?
Right. So you know, my panelists here, they've hit on all the points that the producers we work with, who are often disenfranchised, are struggling with, right? The devaluation of their currency. People want to live in a place that is affordable, but earn in US dollar, because the US dollar has traditionally been very stable. So with PYUSD, we can provide them with that type of stability, versus, you know, if we're in Latin America, they may have to transfer into peso and take the peso, and then it may not go as far if they were if they were transacting in PYUSD and also probably paying in PYUSD, right? But the stability portion is really important. There are other platforms that are out there as well, and you know, you have to put yourself in the shoes of these producers. They are unbanked for a reason, right? And that's because there's a significant lack of trust. So it was very important for us to choose a partner that had this global recognition and was also stable, because stability is the word here. It's a core word, and PayPal is a very well-known name. So I can go to a producer in the hills of you know, Latin America or Africa, and they will know this organization, and they will trust the brand. And so it's easier for us to, one, convert some of these producers that we're working with to use some of these different digital tools like PYUSD, and again, we can pay them instantly, which is, you know, absolutely transformational for some of these producers, because they often have to wait very long times, and they also aren't getting the money directly. They're getting the money from other people who have the privilege to be banked, because a lot of these producers are unbanked. So it's a problem that, you know, it was transformational for me, because when we went there and we met with these 1,200, this community of 1,200 producers in Popayan, and they were crying, they were praying, and they wanted to do the circle because nobody else took the time to actually go and execute an initiative of bringing this community together and getting their products into a global market. And we wouldn't have been able to do this without some of the innovations that you guys are bringing to the world.
Yeah. I mean, for us, I mean, we totally agree, right? For us, it is about solving real world problems, and really excited that you could leverage PYUSD to actually make payments out. Nalin, how is Google thinking about leveraging like stablecoin or PYUSD? Are there specific use cases that you're thinking about?
I mean, for stablecoins, so first of all, I think like among the world of crypto and blockchain, I think stablecoins are most ready for mainstream adoption, right? I think, Brett, you mentioned this as well, just because they have that stability and they're pegged to the dollar. So we're trying to do everything we can. Like, as I work in Google Cloud, I lead a lot of the products there. We think about developers and builders, right? So how do we make it super easy for builders to build on this space. So we think about things like, how do you make it super easy to access the data, right? So we're doing things like putting the blockchain data in a regular database, or a BigQuery, which is like a SQL accessible data store. So everybody knows, or most developers know how to access data via SQL. They don't know how to access data through the specific protocol for Ethereum or Solana, et cetera. So I think that's one aspect of it. The other aspect of it is we're just trying to help, different protocols, including PYUSD on Ethereum and Solana, like reach a broader set of developers. I wanted to talk about, like, today we're really excited about launching faucets for PYUSD on both Ethereum and Solana. So these are live right now. If you take out your phone, you can receive 100 PYUSD on testnets, right? Why is this important? Because, like, I don't know if everybody in the room understands, but if you want to write any data to the blockchain, you need to have currency. You need to pay for that, right? Anytime you want to write any data on the blockchain, you need to pay for that. So when you're building, you have something called a testnet. You still need tokens to write data on that test network. And so it's a very difficult thing to kind of figure out. Like, you're reading a tutorial, you get excited about building on the blockchain. All of a sudden it's like, okay, well, where do I get these tokens? So we're trying to make it super easy to get these tokens, and excited to partner with PYUSD on that front. We'll also be indexing PYUSD data in BigQuery, so you can query and understand, like, what are all the transactions happening on PYUSD among different parties, and seeing that growth, how many wallets there are that hold PYUSD. We'll make it super easy to do that with dashboards and our BigQuery data sets. So these are a few of the things that we're doing that we're really excited about.
No, that's amazing. Yeah, congratulations on the launch.
There wasn't enough excitement around that.
Yeah, it's like, woo! Yeah. So, Brett, to you, so this is more of a personal journey, right? Like, how did you get into Web3, right? And for our developers here, if this piques your interest, the next question is immediately like, how do I get into this? What do I do next, right? And how do I experiment and test? So Brett, tell us your story and your journey. How did you get there?
Yeah, great question. I think, like, I'll attack the latter half first. So I think, like, the beautiful thing about what PayPal is doing is with PYUSD, it's already a native almost currency, right? That is already integrated with PayPal, which is the beautiful thing. So if you're a new developer coming in, easiest thing I would prescribe is saying, hey, just go right to PayPal, read the docs, and just get going to integrating it with your payment stack through PayPal directly. If you want to go one layer deeper on that, then you could start going into, the rabbit hole of what is Web3. You can look into things like what are ERC20 contracts, really understand the fundamentals of what make a token contract, and then the smart contracts that allow the programmability of, say, like a stable coin like PYUSD. So there's a lot of stuff you can peel back there as far as just what you can approach from, say, like a developer standpoint. My personal journey, so I think like most of developers in the audience, I like to tinker with things. So back in like 2015, 2016, there was this question of like, what is crypto? It was perceived as like this scam. People were just, creating networks and tokens and trading tokens, and it was very volatile, it was very scammy, right, at that time. But what I saw, and I think what most people who are, fully crypto forward folks saw, was this is going to be a new native architecture for the web, right? And what these rails are, what these networks are, is a new way of interacting with digital forums, digital platforms, right? Where the utility actually comes from the chain itself. So that's how I started going down the rabbit hole of like, what is a blockchain? What is a smart contract? What are all these things that can be done? And I started really just like working my way into into Web3 and like crypto. And I eventually got to a point where I was actually working to build consumer-facing products from NFTs. So if anyone's familiar with NFTs, it probably also has a negative connotation with scams because it was another boom and bust cycle. But the interesting thing about NFTs, to illustrate the point, right, is that they represent digital identity. So I think like there's all these different use cases coming with blockchain where all these things are merging, right? So it's store of value, it's identity, but at the end of the day, it's about access, it's about ownership, about your footprint in the digital landscape.
That's awesome, yeah. So actually, Nalin and Brett, like either of you, right? So what do you think are the common challenges like developers face today, right? When they, A, when they get started, and B, when they start actually getting into it? Like, do they have resources that they can go to?
Yeah. So, do you want me to answer first, or?
Oh, yeah, please.
Okay. Cool. Yeah. So I think like just generally, there's a lot of complexity involved with Web3. When I speak to people who are not in the crypto world, they think I'm almost speaking another language, and it's true, right? It's kind of in our own bubble, so to speak. But I think for anyone who is interested, I would say start with the foundation, start with the primitives, right? So start with, like I said, what is an ERC20 contract, right? And that is the token standard for PyUSD and other stables like it. But also get really familiar with smart contracts. Smart contracts, layman's terms, they are the way in which you program money, right? So we're entering this space where money becomes programmable. And smart contracts are the vessel to being able to execute that programmability. So I would say start there, and then if you want to go even further down the rabbit hole, you can start looking into open source libraries, Ether.js, Solana.js, Web3.js. You can go into open source protocols, swapping, bridging, and things of that nature, and just build from the bottom up.
Yeah, so I think, as Brett mentioned, there's a ton of complexity, right? I mentioned earlier, just accessing the data is hard. Smart contracts is a whole new way of building, right? It's a whole new tool chain, whole new languages you have to learn. You've probably not coded Solidity before unless you get into smart contracts. So there's a ton of things you have to learn. And I think like in Google Cloud, we're trying to make things easier by offering the right infrastructure. One of the big things we're doing, or like one of the big opportunities I see, is that everyone's talking about AI every day. I think like we can, in this room, we're all developers, or most of us are developers. We can recognize like the most transformative impact AI is having right now is with software development, right? And so if you think about how we're making it easier to just build normal applications, I think the opportunity with Web3 is going to be even greater because of the complexity. Nobody knows how to build on this thing. Now, if you can just use prompts and like vibe code applications, smart contracts, dApps, I think we can have many more applications being built on this technology. And that's a hugely transformative opportunity, like this layer of abstraction we're creating with AI that's going to make it easier for anyone to build. So that's what I'm excited about.
Any thoughts here, Mark?
Oh, I mean, you guys are, my esteemed panelists right here are very smart. But I'm dealing with a lot of people who, actually farmers on average, they have a 4th grade education. So I don't have to go and explain to them in depth these types of back-end protocols or technologies. I can just say, we're going to send you money on PayPal, right? They understand that. They'll open up their account and then they can get funded right away. So we can translate whatever you're saying into something super, super simple for someone who just knows open your wallet and send the cash, right? By sending a digital payment through whatever account they have set up, because they know how to sign up for an account.
Yeah.
Just add something there. Yeah, I think like what Matt's saying is actually the most important thing, right? Like in Web3, we have a tendency to talk about the technology a little too much, like how this works and how it doesn't work and how complicated it is. Really, all that matters is like the use cases, the new business problems you can solve with this new technology. And Matt's actually working on those things. So that's really exciting. And I think stable coins itself have that opportunity. Like everyone understands payments. Everyone understands how hard it is to do payments with fiat. So this is like the main use case. And I think the application to the supply chain is really powerful.
Yeah. And I think, Brett, that comes back to what you mentioned, right? Which is like for the developers here, right? The question was, how do you integrate into Web3? I think we're like companies like PayPal, companies like Google, we're making it easy for you to not have to actually integrate, right? And so you can build use cases outside, and then you can also integrate with our APIs to enable use cases like payouts. Right? So yeah, it's been a fascinating journey for us. Okay, so quick. So the next question is around like, what is your prediction for the future, right? Like, what do you think is going to happen, especially now you see amalgamation of technologies coming together. So Brett, what's your prediction for the future?
Yeah, great question. So for me, I do want to back up one point about stablecoins. So I think like we've been kind of approaching this from like as an industry perspective, approaching this from your point about just like introducing more complexity when we speak about Web3 and what it is, right? I think actually with stablecoins, a lot of that complexity begins to collapse because now what you're saying is effectively the stablecoin becomes the thing that you're programming, right? And that transcends all boundaries. It's more efficient, it's more energy efficient, it's more, it's cheaper, faster, crosses all borders, right? So the Trojan horse is really about stablecoin adoption, usage, proliferation of stablecoins, and that is the sort of technology that transcends all boundaries. For the future, I expect that to accelerate even further. So, you know, as we talked about stablecoins, we know stablecoins can be backed by the US dollar and pegged to the US dollar. We're starting to see other real world assets, so RWAs as they're commonly referred to, becoming more and more tokenized. So I almost see the world that, you know, the traditional like software term is like software is eating the world, right? I actually think stablecoins or tokens will actually eat the world. I think a lot of things are going to become more and more tokenized, and it'll actually, through that process, it will allow more participants to come in and be able to participate within that network, within those economies, right? So it's almost like we're carving out these digital economies where all these things will proliferate and they will be more tokenized, and it'll accelerate at higher paces. And I think, like, to your point, Nolan, I think AI is going to play a very, very crucial role in that. So as things become more agentic, right, you're talking about how to facilitate all the technical operations of, say, like connecting payment rails, or maybe there's some other tokenized operation that then gets automated through this agentic like schema that we're all going towards.
Yeah, so this will be my second prediction, I guess, because I already predicted that every application in the future is going to have some Web3 component. But I think, like, if we think about this agentic world that you alluded to, maybe you're building an agent, maybe you're using an agent. If you're not, you will in the next probably months use an agent for some capability, right? I don't think it's a stretch to think agents are going to leverage other agents, right? So very naive example is maybe you have an agent that does like travel booking. It's the classic example everyone uses. That agent might talk to 3 other agents to complete that booking. Maybe it'll talk to a hotel provider, a flight provider, an experiences provider. Now, how are they going to actually interchange money, right? How are they going to pay each other for the value that they're providing? I think crypto rails are probably the ones that are going to make agent-to-agent payments work. And I see CEO of Kite AI here, who's very bullish on that as well. So I think this is how this is going to work, and we're going to see like Web3 and AI together kind of create something we haven't seen before. And I'm really excited about that because like the capabilities of like micro payments of crypto combined with paying other agents is super powerful.
I completely agree with you. You know, it's going to be a massive force multiplier for a lot of small independent shops. I think it's going to create a significant amount of independence in the future. An example for us, and we're building an agent right now, or not me, but our engineers are. But when we go to these countries and we digitally map the supply chain, we are collecting data for the best certified producers, but also the warehouses and the processing plants that have these certifications that a lot of small coffee producers aren't able to access, right? If you need to get into Trader Joe's or Whole Foods, you have to get a certain certification. And I see, you know, there's this big push for manufacturing to come back to the United States, but I don't see it happening in the traditional sense that we've seen manufacturing occur. It's going to be almost virtual manufacturing. We're going to build virtual factories from this world you guys are thinking of. So the past couple of years, we've been building these networks of the best producers, the best warehouses, the best roasters, the best packagers, the best bag designers. And we now have this agent that can communicate to all the best manufacturers within this network to produce a product for us. So if somebody is good at what is going to be necessary is being a good community builder. So if someone's a good community builder and they have a great following, they can go on a platform and scale up to 15 pallets, which I use as an example a lot. It's like 75 grand, right? One person can do this and sell it to a Whole Foods because they have the certified processes of building this network, which is what we're trying to lean towards. So that process alone can take 6 months to a year to develop, and it takes a lot of people to be able to coordinate. And now an agent is going to be able to do that in the back end with under a second, coordinating with all these different manufacturers who have decades of experience in putting a beautiful product together.
Yeah, I mean, so if I take the themes, right, it's micropayments, it's agentic commerce, and you combine then the use cases that's basically limitless, right? So what you can do. So that's amazing. So first of all, I would love to thank you so much for just being on this panel. It's been inspiring. I hope you all had some questions answered. And if you want to know how to build, what resources you can have, the QR code's up there. Scan that. There's a bunch of resources here. And we're always here for you to have, if you have any questions.
Can we get a nice round of applause for our host? She did such a phenomenal job. Amplifying the voice of small businesses like my own. Thank you, Smita. Thank you, PayPal, for always including us.
No, thank you so much. We are always inspired by by people like you, and it inspires us to build more and provide resources for all of this. So thank you so much for being here.